Today's date is 2nd of August 2026, and I'm going to be analyzing gold in real time. Actually, I'll be analyzing gold. I'm looking at my outlook for this coming week and for this month, actually. So, lock in with me while I analyze gold. Probably I'll be analyzing BTC as well. So, let's see how it goes, depending on how fast I'm going to be analyzing gold. I'll see if we can do BTC as well. But if we are not able to do BTC, we can do that maybe another time, maybe tomorrow or during the week. But for now, uh, we are doing gold, and I'm going to be analyzing my outlook for the week and for the month, this month, looking at the direction of where the market is going. So it's very simple. It's the same thing I keep doing over and over again. Same strategy, same confluence I've been looking for, same entry criteria, same exit criteria. And that's all you need to do to get good at trading, actually. That's all you need to do to get good at what you're doing. The more you complicate everything, you're never going to be profitable. It's going to take you time to be profitable. So, without saying much, let's just dive into the chart. So normally, if you've been following my analysis, you know I do top-down analysis. When I say top-down analysis, if this is your first time watching my video, when I say top-down analysis, it means I start analyzing from the higher time frame, then down to the lower time frame before taking my entries. That is the definition of top-down analysis. So meaning you're looking at the charts from the higher time frame, and you come down to the lower time frames, down and down and down till you see what you want to see and you take your trade. So top-down analysis is very important. You have to look at the charts on the higher time frames to give you the direction. So when the direction is clear, at least the 4 hour and the 1 hour can tell you, okay, this is what I want to do. This is what I want to do. Do I have to wait for some time? Do I want to enter now? So that's basically it. So top-down analysis this time around, I would prefer to start on the month on the yearly time frame, sorry, on a yearly time frame. When I'm saying yearly because we've passed the first cycle of the year, which is the first 6 months, and we are in the second cycle, which is the second 6 months. So we are in August right now, and I think we are left with just 4 months or 5 months. Yeah, 4 to 5 months. We are in August. We are left with just 4 months, yes, 4 months to end the year. So we are in the second cycle of the year, and I have been looking at gold buying from this second cycle, but gold has been gold. Gold does what it wants to do. So you just have to take advantage of the opportunities you get with good exits, good entries, and you are good to go. You make some profit. So, like I said, I'm starting on a yearly time frame. Now, on the yearly time frame, what do we see? That the whole of last year we've been buying. The whole of last year, gold has been very bullish. You can see, not even just last year, but gold is just buying on a yearly time frame. And like I keep explaining, trading is just two things. It's either it is buying, sorry, it is three things. It's either it is buying, it is selling, or it is consolidating. So anytime you open a chart, is you are looking for three things. It's either the market is bullish, it's either it's bearish, or it's consolidating. And here on the yearly time frame, we can see clearly that gold is bullish. Gold has been buying for a long time. Why? Because we see higher highs and higher lows. Okay, on a yearly time frame. Because we see higher highs and higher lows. Okay. So once you see higher highs and higher lows, you know you're in a bullish trend. And once you see lower lows and lower highs, you know you're in a bearish trend. Now, Consolidation is when you're not seeing a bullish trend, you're not seeing a bearish trend. The price is ranging within a particular zone, a particular range. That is when we say price is consolidating. But on the yearly time frame right now that we are looking, you can see clearly that gold is bullish. Now, it is just giving us an idea of what gold is doing on a yearly time frame. We are not going to use this, but it's going to give us an idea. So now let's go down to 6 months and let's look at what 6 months has been doing the whole time. 6 months is equally doing the same thing, bullish, very, very much the same thing. Higher highs and higher lows. You can see higher high here, higher low. Give a higher high here, give a higher low here, and give a higher high. And now we don't know if it's going to give a higher low all the way down. We don't know. But what we know is on the yearly time frame and on the 6 months time frame, gold is bullish. Now, let's go on the 3 months. So you see, this is top-down analysis. We started from the yearly, we went to 6 months to see what is happening. Now we're on the 3 months. We want to see what the 3 months is saying. Is the 3 months speaking the same language? Because 12 months is saying buy, 6 months is saying also buy. Now let's see 3 months. Now we can equally see that 3 months is also bullish. From the down here, you can see that it's been going up, down, higher high, higher low, up, down. Same thing. So 3 months is also bullish. Nothing to see here. 3 months is also clearly bullish. So let's go on 1 month time frame. So you see all these time frames are giving us a clue of what the market is doing in the long term. It doesn't mean we are going to take our trades on a monthly time frame or on the yearly time frame or whatever, but it's giving us a clear idea of what the market is doing on a bigger picture. So if you're following, now we're on a monthly time frame. Now it gets more interesting here, because if you look at the monthly, we can also see that on a monthly time frame, looking from the downside, it's been bullish. It's been clearly bullish. But from the monthly time frame here, we are going to start taking being more technical, looking at key zones and looking at what's the next move of the month of the market is, because from the monthly time frame you have to look at the market in a critical way. So clearly we can see it's bullish here on a monthly time frame. We don't know whether it's going to come all the way down here before it goes up, or it's just going to dump. We don't know yet, but we know it is bullish. Now, once we know it's bullish, let's see something here. There's something interesting here on the monthly time frame I would love us to look at. Now, I have a first confluence here, looking at how this candlestick closed, okay? Looking at how this candlestick closed. I'm looking at this month, this current month, because this is the last month that formed. This is the month of July. So currently the month of August is currently playing out slowly. It's going to be playing out slowly, because the month of July ended on Friday. It ended on Saturday. So coming week, Monday, the month of August is gonna take place. Now I am looking at the month of August for a buy. Now, this is the confluence I'm having, and I'm going to explain why I'm expecting a buy. Now, I have one first confluence, which is telling me to buy gold, which is this candlestick that formed on the July ending of July. This is how July ended. So I am looking at this wick filling to the upside. I'm looking at this wick filling to the upside. So I'm looking at the month of August to buy, fill to the upside. We'll see where we are going to take profit, but we don't know yet. But we are going to see. But this is the first confluence, looking at the candlestick, how it closed. Now, I'm going to go on. Let's still be on the monthly time frame and analyze a bit. Now, if you go back in time, you can notice that on a monthly time frame previously, gold has been bullish all the way. But at a point in time, this year, I think somewhere in February. So this is January, February, March, April, May, June, July. Very good. So in the month of February, that is where the bears came into the market. So in the month of January, all the way back, gold was just buying. It was just pumping up. Last year, it was just pumping up. Then the month of February, all of a sudden, we had this bearish engulfing candle that engulfed the month of January. So once it engulfed, it left a wick here. Now, when the wick was left, I was expecting this wick to fail, and it failed completely. So once this wick has already been filled, now I'm expecting a push to the upside before, if you're going to come down, we're going to come. Now, this is why I'm expecting a push to the upside. If you go on the 3 months time frame, let me take you back to the 3 months time frame. Look at how the 3 months time frame closed. Look at how this 3 month candle closed. There's a bearish engulfing candle. You see how this engulfing candle, this bearish candle engulfed it. Now, if you know candlestick very well, or candlestick psychology, a bearish engulfing candle at a key level tells us that there are probably sellers in the market. So here I'm going to outline here as a key level, which is a resistance on the 3 months time frame. So this is a resistance on the 3 months time frame. So on the 3 months, at this point, you can see that sellers took over and they engulfed this candlestick. So at this end, I know there's a lot of sellers sitting here on the 3 months time frame. So let's go back to the 1 month time frame. 1 month, good. So currently, I am saying I'm expecting a buy from this zone all the way to the upside before we are going to come down. So this how do we call it? This monthly candlestick, which formed for July, has given me first confluence, telling me that, okay, probably buyers are starting to get into the market and we are going to buy to the upside. So that's my first confluence. Now, if you go on the weekly time frame, you can see clearly here that market has been doing this. From the down here from last year, it was going higher highs, higher lows. It was just going higher highs and higher lows. It was just going. Then all of a sudden, it broke this low. This is a last low that created and broke it. Came back and now gave this low. Okay. So immediately it gave this this last low got broken. Immediately this last low got broken and it retraced. That was what brought about this whole sell. Now you can clearly see that on the weekly time frame, gold is clearly bearish. Why? Because you can see a clear trend here that we have a lower low, we have a lower high, and it is giving a lower low. So this is what I'm expecting, for it to give a lower high before, if we are going to come down, we are going to come more. But then again, this is what I'm expecting on a weekly time frame, for price to give a lower high before it comes here. So this on a weekly time frame, if you can clearly see and clearly understand what I'm saying, I see a lower low here. There's a lower high. That's a lower low. So what I'm expecting is a lower high here before, if price is going to come down, we are going to start selling. Now, so this move I'm expecting here is a clear confirmation for me. So on a weekly time frame, I can see that I'm expecting price to buy to this side. Okay. On the weekly time frame, I'm expecting this move to happen. This move. On the weekly time frame, I'm expecting this move to happen. Let me change the color to blue. Yeah. So on the weekly time frame, I'm expecting this move to happen. Now, on the monthly time frame, know that the candlestick for July closed like this, and it also give me a confluence telling me that, okay, buyers are ready to enter the market with this candlestick forming, with candlestick psychology. And candlestick psychology comes with practice. You have to know when a candlestick forms, this is what it means, this is what it means. So with candlestick psychology, with how this candlestick closed, I'm expecting a wick fill. I'm expecting this candlestick, this current month, to fill to the upside. Now, that's the first confluence. The second confluence was given on the weekly time frame. With this trend, I'm expecting a push to the upside before, if it's going to come down, it's going to come down. Now, let's go on a daily. If you come on a daily time frame, so now I have two confluences, one on the monthly, no, one on the 3 months time frame. Okay, so I have three confluence. So the first one is the one on the 3 months time frame. Okay, the first one is the one on the 3 months time frame. I'm expecting price to come back to this resistance. Okay, because we have an engulfing candle I'm expecting price to retest this resistance before we come down. The second one is on the monthly time frame, which is this candlestick closing like this. The candlestick for July closing like this is telling me that I'm expecting a wick fill. So wick fill, I'm expecting it to buy all the way to the side before we come down. Now, if you come on the weekly, so now two confluences. Now on the weekly time frame, like I said, you can see the clear trend here. On the weekly, you can see a clear trend here that we have a lower low, lower high, and this gave a lower low. So I'm expecting a lower high here before it's gonna push down. So on a weekly, you can see clearly that I'm expecting a push to the upside. So now three confluences. Now let's go on a daily. So you don't just wake up and start taking a trade. You need reasons. Your reasons have to align before you actually take a trade. Now we are in a consolidation zone. You can see that price got here. It's been consolidating here. I'm on a daily time frame. It's been consolidating. So this is where we are going to take note of our support, resistance, and key levels, because on the daily time frame, that is where things get really critical. Now, before the daily, there's a key level here on a weekly that was formed, which is this. You can see here, this is a support on the weekly time frame. And you can see that, let me delete this so that it doesn't confuse. So you can see that this is a support formed on a weekly. And now you can see that price got here and clearly respected this key level, because this key level is drawn from here. Let me draw it with a zone from here. Good. So this key level was drawn from here. And you can see that immediately price got here. It has not broken it. It respected it. You can see this green candle. This green candle shows that it respected this key level. Now, this is a confluence. So this, I have a key level, which is a support on a weekly time frame. Now, if you go on a daily time frame, you can also see that the daily candlesticks are having a hard time to cross this zone. They're having a hard time. These people came here, they tried to break it, they couldn't. This tried, it couldn't. And this, you see, immediately this got here, it couldn't break it because it's a zone. You can see buyers are sitting here aggressively looking for opportunities to push price to the upside. Now, on a daily time frame, I can see a support here. So this is a zone. This is a zone here. This is a support zone on a daily time frame. Now we can also see another support here on a daily time frame that has been created. Okay, I can also see another support on a daily time frame here that has been created. So this support being created, we have one support here, another support here. Okay, so you see subsequent supports have started creating on a daily time frame. So you see that our confluences are coming in play. They are coming together. Now I have one support, then the next support. Not forgetting that I'm expecting this move to the upside here. Okay, I'm expecting a move to this place. All right. So if you come on 4 hour, because we are doing stop down analysis, okay? So on a 4 hour time frame, what do we see? You can see clearly that here it was trending all the way to the downside, but it got here and it's been consolidating. It doesn't know what to do. Why? Because there's a lot of buyers sitting here and they want to push price to the upside. So you have to be very careful so that you take a trade and place your stop loss where it should be placed to avoid losing your money. Now, gold moves in a very interesting way. It can consolidate for a very long time, maybe for 2 days, 3 days. But just for one day, you're going to see a very huge move. So me, next week, this is what I'm expecting. I'm expecting a push to the upside. I'm expecting a solid buy. I'm expecting a buy all the way here. Now, I'm going to be adding positions. So immediately market opens, I'm going to buy. I'm going to use the monthly candlestick to take the trade. So I'm going to use the monthly candlestick. I'm going to take an entry and put my stop loss right below this monthly candlestick. It's going to be a very big stop loss, but that's what I'm going to be doing. I'm going to be putting my stop loss right below this candlestick. right below the monthly candlestick, this monthly candlestick. So I'm expecting a very huge push to the upside. So the take profits are levels. My take profits will be here. So this is what I'm going to be doing. Let me go on the 4 hour. Yeah. So this is where currently price is. And I'm looking at buying gold. Where are you? Long. I'm looking at long in gold. Putting my stop loss here and here. So this is my first entry. So immediately market opens, I'm going to be entering gold. This is a 1:, I think 1:3 risk to reward setup. So imagine you are risking $200. You'll be expecting to make $600 with this move. Now it's going to be a very big move. So as a good trader, you have to know how to enter the market. Now I'll be immediately market opens, I'll be entering with the first position and my stop loss will be there. Not forgetting that I have a trend line here. Okay. Not forgetting that I have a trend line here that is going to guide me as well. So trend lines are for entries. Trend lines are for entries. So my first position is going to be here. Then I'm going to be waiting for this this trend line to break. So once this trend line breaks and retests, I'm going to be adding another position. I'm going to be adding another position. So I'll be looking at maximizing this trade. I'll be looking at maximizing the trade. Now, when first take profit hits, I'm going to be taking critical look at this level because I'm looking at a very huge move. Okay, I'm looking at a very huge move. But for the month of August, I'm just looking at this weak feeling. For the month of August, I'm just looking at this weak feeling, but I'm very positive it's going to continue buying all the way to the upside before the year ends. So let's see how it plays. I've told you guys what I'm going to be doing once market opens. My stop loss is going to be here. My entry is here. I'll be adding more positions when the trend line breaks. And that's it. For BTC, I called out BTC sales, but I exited because it's not really moving. So I don't really want to be stressing myself. So nothing to see on BTC, but it's clearly bearish. I had a position here, but I closed. I closed it because it's not really moving. So let's see how gold is going to play out this coming week and this coming month. But currently I'm looking at buying gold. Anything sells, I'm not really interested. I'm going to be interested in sales. That is, if this key level here, this key support here, this key level breaks. So you always have to have an exit strategy. So this is my exit. Price comes here, I'm out. Now, when price comes here, it means it is breaking this key level. Now, when this key level breaks, it means more sales. When this key level breaks, it means more sales. So look, this is what I'm looking at. I don't really want to talk a lot. I think I've explained it well. If you have questions, you can DM me. If you want to join my private community, my inner circle, DM me, and I'll give you details on how to join. So stay safe, and I wish you all a profitable week. Peace out.